In this lesson, we'll show you how to use curve as an odds enhancer by determining where the entry zone location is relative to the higher time frame supply and demand curve. It's important you understand that when setting the curve, we're outlining a range which happens to be defined by supply and demand zones. However, these supply and demand zones are not being used as our entry zones. That is not their role in our multiple time frame analysis. Instead, they are simply defining the field of play, so to speak, for the product we're looking to trade. When we talk about zone location within the curve, we're referring to where within the curve range the lower time frame entry zone is located. This means determining whether the entry zone is low on the curve, in the middle of the curve, or if it's high within the curve. Lower on the curve suggests wholesale prices. Higher on the curve suggests retail prices. And the middle suggests equilibrium. We ask the question, how high or low does the lower time frame zone sit within the curve? And that is what we want to determine when we're thinking about taking a trade. Since we're in the business of buying low and selling high, that is precisely how the curve odds enhancer will be scored. The idea for a shorting opportunity is to sell high. Therefore, a lower time frame supply zone that is located within the retail range of the curve gets the highest score of 1 out of 1 possible point. For an opportunity going long, we want to buy low and sell high. So a demand zone low on the curve also gets the highest score of 1 out of 1 possible point. If the zone is in the middle of the curve, whether it's supply or demand, the score gets cut in half to 0.5 out of 1 possible point. And if the entry zone is in the opposing curve extreme, such as a demand zone located high on the retail portion of the curve, or a supply zone located low on the wholesale portion of the curve, the zone gets a score of 0 out of 1 possible point. The lesson here goes back to buying low and selling high. A demand zone low on the curve and a supply zone high on the curve increase the probability of buying at wholesale prices and selling at retail prices. Going back to our working example in the lower left-hand corner of the screen, we see the lower time frame demand zone is situated low on the curve. This garners a full point for the curve odds enhancer. Adding 1 point for the curve to our scorecard brings the score for this zone to 8 out of 10 possible points. Notice we only have one odds enhancer to go. So now you know how to assess and score a supply and demand zone using curve as an odds enhancer. Remember, the more odds enhancers you use to score a zone, the better the opportunity of the zone working out for you. Before you move on, use the examples from previous lessons and score out the odds enhancer for curve. Ask yourself, where does the low time frame supply zone reside along the curve? Is the low time frame supply zone high on the curve? Is it in the middle of the curve? Or is it low on the curve? Also, ask yourself, where does the low time frame demand zone reside along the curve? Is the low time frame demand zone low on the curve? Is it in the middle of the curve? Or is it high on the curve? Hope to see you in the next video.